Hey everybody, today is December 16th, and yesterday was the last FOMC meeting of the year, and Chairman Powell shared many things, many ideas, and the market responded and has continued to respond today. So what we want to do is take a look at what happened during the meeting and if we've gotten follow through on yesterday's action into today. But first, you may recognize that I am not dressed normally for these videos. I am wearing my Griswold special family Christmas sweater that my wife was kind enough to purchase me. And so also today's graphics might be a little bit more Christmas tacky than usual. Actually, our graphics are never tacky, so they will be tacky for the first time today. But we hope that you understand the tone of the season. So let's jump right in to where we were yesterday at 2 p.m. and what was going on in marketplaces. And in technology and consumer discretionary stocks, they were ripping higher. Tech was up 3.64%. Consumer discretionary, the wants of the market, the wants of the consumer were up 2.46%. The broad market was up just about 2%. Okay. And then sort of between the 2 and 1% range, we've got materials, healthcare, energy, industrials, and then bringing up the bottom here, communications, utilities, consumer staples. No surprise there. They've kind of been bottom dwellers all year. The surprise, the outlier here is financials, sitting here just up half a point, okay? 54 basis points, 0.54%. So that's how sectors are reacting. Let's take a look at a couple other areas in the market. Value and growth, an important relationship we're always checking. So growth was up huge, 2.91% between 2 o'clock and 4 o'clock yesterday, off of the chairman's comments. Value up only 1%. So a 3-to-1 move of growth against value looks like we're confirming sort of the prevailing trend, right? And then let's take a look at gold and silver. Silver was up 3.13% and gold up 1.63%. So those are pretty significant moves coming out of the comments, coming out after 2 p.m. on December 15th. But in order to have a shift in trend, in order for there to be a persistent move in the market, we need follow through. You have to get confirmation. You can't just trade on one day's activity. Currently, we have many years now of technology and consumer discretionary leading the way, growth leading the way. Is that what we're going to be moving forward? Are we getting that type of confirmation? Well, based off yesterday at 2 o'clock, it looks like that was going to be the case, but let's see what's going on today. So as of 2 o'clock yesterday in financials, a bit of sideways action in the sector, okay? Not particularly decisive, kind of grinding sideways, not really taking a direction. What has it done today? So as of the 16th, this mark right here, financials is taking off. Financials is having a very strong move. Technology ripped higher after 2 o'clock during the meeting into the close. What's it doing today on the 16th? It's doing the opposite. It's retracing all the way back down. So no confirmation of direction out of technology. Let's look at the VIX. What's the risk score telling us? So here we are 2 o'clock on the 15th. Consistent drops in volatility, the fear index coming down. Where are we on the 16th? Ripping back up, okay? Well, maybe not ripping, but moving higher. Definitely more consistent with the reversals that we've seen in technology and in financials. So if we take a step back and we look at the big picture, we still see that we have an upward sloping 50-day moving average, this gray line or the green line here. We still see that in the long term, we're making higher highs, but not off of the last highest high. We are still below that. We have not retested this sort of Thanksgiving time low. We're sitting right in the middle there. And that's not a particularly conclusive look either, but on balance, this is a better looking chart than not. Again, this is the Russell 3000, not the S&P 500. So this is about 98% of the total US stock market. So it's a very broad measure, but again, not making new highs, but still hasn't broken down. We're going to need to be looking into other areas to get confirmation on where this is going. So puts us right back to where we always are, which is process. We have to continue to work through our rankings and our scorings to make sure that we're properly allocated moving through this season. Something that we need to be coming to grips with is, we've had some spikes in volatility this year, but nothing particularly persistent. It is reasonable to expect that with this change in Fed policy, we're going to see more price volatility, okay? So we need to be prepared for that. Number two, the frequency and the intensity of rate hikes, that's not predetermined. There's inflation, there's COVID, there's a number of factors, the unemployment rate. All of these things are going to dictate, likely, I say likely, I feel a little sarcastic in that, and because there's been crazy things going on in those things and we haven't taken action yet. But aside from that, there's a lot of data that the Fed has to digest and figure out how it wants to unwind where we are right now and try to normalize rates a little bit. We need to be open to new leadership in the market. Technology, consumer discretionary, growth over value, U.S. stocks, those have all been trends that have worked for a very long time. They may not work going forward. So we need to keep score, keep our eyes open, and stay available to new leadership. Okay, so that's what we're going to be doing as we head into the new year and beyond. Merry Christmas. Have an excellent new year. This is likely the last video of the year. So if you need anything, please feel free to reach out. Be glad to chat. But hopefully things go smoothly for you over the holidays, and I look forward to seeing you in the new year. Take care.